Hello, welcome back traders. Welcome to our daily forex forecast. And today episode we're going to dedicate it to the monthly forex forecast. As you all know, the month of September 2025 just ended, so we need to start from the monthly perspective and do a top-down analysis. Now, this is a monthly top-down analysis to represent or to support our daily forex forecast. So you're going to have to sit tight, and I'm going to try to make this video as short as I can, and as short as I can. So sit tight and let's get into the chart. And if this is your first time stumbling on this uh, YouTube, subscribe to this channel, turn on the notification button so that you can get notified whenever we drop our daily forex forecast. So this is the dollar index, which is the DXY, and now this is the monthly close for DXY. If you look at this particular month, we see that it is an indecisive candle that sweep liquidity, right? We have a longer wick below, which is long wick. Yeah, we have a long wick, and we closed indecisively without a body, and but a wick with a wick that has sweep liquidity, which is the the July 2025 candle low, monthly candle low. We sweep it, and the market rally lower, sweep it and reject higher. Now, what does that implies? That implies what? Strength, incoming strength in the dollar. Weak below, higher prices, right? And weak below, weak above indicate lower price. Now we have weak below, right? So indicating what? A higher prices. So since we know this, then we're going to anticipate. One of the things I want us to anticipate is, where is the next month's candle low going to be probably. Then for us to understand that, we need to look at the overall monthly range, right? So we need to look at the overall monthly range. Now the month has been rallying lower from on the monthly perspective, from this swing low, so swing high, all the way to this swing low. There have not been any swing point created until we get to this low. Now this is a minor swing low because we broke it and create this one. So, and this swing point did not create a swing high to create, like, right, there is no swing high that created this swing low. So that is why we are going to use this swing point. Now since we know that this is our monthly range, then we're going to use our Fibonacci to plot out the range. Then we are going to anticipate for what? A retracement inside the range. Now that means these higher prices, that is, or the strength that is showing on the monthly time frame, that market is about to continue to go higher, is what? A higher time frame retracement. That means we are retracing back into the premium. How far can we go into the premium? Is above the 50%, right? Now on the monthly perspective, we have this cumulative, this up close candles, this cumulative candle represent our bearish order block, and we pick the one at premium, right? Cumulative order block, but we pick this one at premium as our monthly bearish order block. Now we have a fair value gap here, which is highly likely to support lower prices on DXY. So this is the overall market lookout for DXY, right? But let's focus on what next month is likely to do, right? So if we look at the next month, now I am anticipating for the next month to price lower and come below the 25% of this candle wick. just like I used to reference on every candle week, that the 50 below the 50%, or that the 50% is you should use it as a PDRA, that is as a key level. Now I am not in support of pricing below the 50%, but the 25% I support price going below the 25%. Now I am going to remove that range, and the 25% represent this. Let me make it uh high and dark it. Yeah, it's okay like this. So this blue line indicates the 25%. So we are anticipating for price to tick below this 25%. Use any lower time frame PDRA, which is whether a order block or fair value gaps to go higher. Then what is our my highest expansion is this candle high. That is if next month, which is October, if October is going to be a very large candle, then this particular month will be my highest expansion. But our first target is previous month high, which is this specific high. Easy target, very easy to reach and no stress. So now, since we have known our perspective or what we are looking out for, let's go to the weekly time frame. Right. So I don't know if TradingView is going to allow me spend more than 30 minutes on my video or 20 minutes. So I'm trying to be faster. So on the weekly time frame, we've seen that this week, well, Monday and Tuesday just finished, and we are entering Wednesday. We see that this week has already price form an efficient price delivery, but we still have this particular low, which is we are anticipating for next month, that market should price below here. Now, can we sweep this low before going higher? Yes, it is likely to be the case, right? But we going to the highest probability, right? The highest probability mostly is price trading lower, taps on within this range, from within this range, taps on this area, then go higher and seek for our external range liquidity, and this is our highest expansion. Why this is our what lowest expansion, which is previous month high. So this is our what highest expansion that we anticipating for DXY to reach. So on the daily time frame, the we've seen that what we projected for price yesterday has delivered as we called out, and price rejected and closed. But we didn't have a close below. What do we have? We have a down close candle that closed above the previous candle low, indicating what strength, right? But now, since we know that the month just ended and a new month is about to kickstart, and there is a fact or a known theory, right, that says that for every higher time frame candle there must be a what a swing low, which is a turtle soup, for the price to continue. Now going in tomorrow, right, I am anticipating for the XY to reach for this fair value gap, which I use the previous candle high as a turtle soup. Why did I indicate it as a turtle soup? I find that I am more inclined using this word turtle soup rather than painting my chart with vi different kind of box, because if you look at this price, there are so many fair value gaps, right? Rather than putting so many things on my chart covering the candles, this it helps me indicate my areas of liquidity. Now I'm anticipating for price to sweep this high, then come lower, which is going to lead us lower. And again, tomorrow is NFP week. Sorry, this week is NFP week and tomorrow is Wednesday, very close to NFP. So price might be distorted and there might be an irregularities. But overall, since we are anticipating for a run on liquidity before the monthly kickstart its main journey, then we can expect price to reach below this week low, which is this Tuesday candle low. Any other smaller time frame PDRA below this candle week's low would be very ideal to expect price to reach into. right? I've spent more time on DXY. So also the same thing with the 4 hourly time frame. We've seen a jump in price already, and we have this bearish order block here, which after a total soup there is always a key level reached for price to go lower. Just like we total soup this area, which is our internal range liquidity that we point out yesterday, plus total soup, we total soup it and go higher. Now why do I indicate it as a total soup? Because I want price to reach for it but reject. After reaching for it, it should reject it and go reverse. That is, this is a turtle soup. If price sweep above it, it should reverse and start going lower, right? And this is a turtle soup. When price sweep below it, it should reverse and start going higher, just like you have seen, right? So whenever you see I indicate a turtle soup, that is what I am implying. So overall on the XY, we are anticipating for price to maybe price can be distorted from now till Friday, until Friday NFP, that will now set the legs for us whether we are going to continue to expect the monthly candle low, our area of project where we projected that the monthly candle low is going to be, which is below this blue line, right? Or within this blue line to this uh, current day low, which is the Tuesday candle low. But we need to see a turtle soup, a higher time frame turtle soup that support, that is in reverse to what the higher time frame directional bias. So on that note, we stop here and go to the euro US dollar. So I want to go to the GBP. I will leave euro. So on GBP, we let's go to the monthly. Now, there is a lot to say about GBP on the monthly time frame. Now, on GBP US dollar or cable, as some of us know, that price has already reached a tick below, which is this candle tick below this fair value gap, and thought to soup it and go higher, deliver higher. But now we form an SMT divergence with the dollar here, price reject and delivered lower. So we are anticipating for continue lower prices. How far can we go? Now we have our candle wicks here. Now I want to see next price remain below this particular high if price is still bearish, right? If this next month is bearish, if this next month is going to be bearish, I don't want to see the high price above here should remain below this high and price to continue going lower, right? So on the lower time frame, we have a weekly that shows a candle close below and this one close below, right? So this is a new week that is going, right? And this is our area of price. We don't want to see price go above next week. That means next week after this candle week, this present week finish, next week, which we kickstart properly the new month, then this high we might see there is a higher probability price might reach for this high as a turtle soup because it's a weekly candle high, so that those that has been on a short, because everybody is seeing bearishness, right? Those that has been on a short will be taken out for price to continue going lower. And yes, we are going to see price rally higher, use this high, right? Which is depending on what price is showing. But the highest probability is what I am noting here. I am not putting my will on price. I'm not saying that it must happen exactly as I am stating, but the high probability or the most logical reasoning with the statistical value we have gotten from price, this total soup, this particular previous week high, market to soup it and start going lower, and our first initial easy target remain this current week previous week low and the previous month low external range liquidity. Then if we go on a daily time frame, right, Now it makes lots more sense on a daily time frame to expect price to sweep what this particular high. We haven't even retest on our fair value gap, right? On the fair value gap we incorporated, and now look at this high, this relative equal high, and we have a fair value gap that's still below our area where we don't want next month to price above. All right, so and again it will also give us a hedge on the overall price, especially if we look at this candle range, right? If we take it as our daily range, then the current trading, the current market is trading at what, at equilibrium price between these two range. So there is a high probability price is going to reach for the optimum premium before going lower. So that is just basically what I'm anticipating on a long time perspective on GBP. So let's scope it with the Bitcoin, right? So as we know, I've called out Bitcoin to be lower prices, but right, but we see that how Bitcoin closed, and this, right, might, on the way the monthly closes, this is indicating strength, right? There is no weakness in Bitcoin, especially on the monthly contract close, right? Despite that, we have a monthly range where we are expecting price to reach for the reach for the discount level before going higher. But we've seen that there is no willingness in Bitcoin going higher, all right, going lower yet on the monthly time frame. Then we are going to wait and align this monthly perspective with the lower time frame perspective, which is a very bit not that very clear on the lower time frame, because we have some factors that is hindering the price action, some unclarity on price, which we are not to oppose our will much on this market. All right, so my network is bad. This, I hate this shit. So so on a weekly time frame, right, we can see market to soup this before going lower, and we have now a relative equal lows which price can reach for if the monthly is actually continuing to be bullish, right? And again we see that price has rejected from this fair value gap, sweep here, sweep an external range liquidity, and this move that is going higher is just a scary move to take away people who don't really understand what how the market deliver, and also get people fake in thinking Bitcoin is going to be overly bullish, right? But now on the higher time frame we see bullish scenario, right? But this lower time frame is showing us that there is a probability of retracing lower, because every candle will have a wick below it. So the wick below could reach for this external range liquidity but might not reach, get to this level, and price will start going higher, right? So which is basically now on the daily time frame. If you look closely, you see a fair value gap here, inversion fair value gap here, and all of that, right? And this is our high where we are anticipating for price to even reach for this NFP, sweep it before, maybe before we see lower prices. And we see that price has already taken this turtle soup. Now this is what I mean by a turtle soup. This is an example of good turtle soup. Price turtle soup it and start going lower. That is what we refer to as turtle soup, and how we anticipate for price to reach for those levels, take it and start going lower. So this is basically what I'm looking out for on Bitcoin, right? Bitcoin really is not really that clear to me again now, right? But I don't, since I don't day trade it and I only trade it on a higher time frame, so I'm left with Euro, and I have to create another video separately for Euro review. So thank you guys, and if you want to know where Euro is going next, then you have to watch the next video that is dedicated for only euro US dollar. Subscribe, like and share this video. Thank you. See you next.